Joining us from Palo Alto, California, Axel Merk, President and Chief Investment Officer for Merk Investments, joins us. Axel, you sold, what, $90 million worth of euros late on Thursday last week. What has changed your mind here?
Sure, and then a little bit more on Friday. Well, what happened on Thursday is that there was a press conference of the European Central Bank, and Trichet gave a fairly dovish outlook. And if you see that in the context that his successor, Draghi, is going to assume the presidency of the ECB in November, odds are that if an interest rate cut is going to come, it is going to be in next month. And on top of that, then the Federal Reserve announced that it might, it didn't announce anything, but Bernanke's speech suggested that there might be further easing on the way. And so overall, that dampened our enthusiasm for the euro, strengthened it for the Australian dollar, for example. But that was before we saw the announcements on Friday that Stark is resigning from the ECB. At that stage, we got more defensive because of the upcoming turmoil. And there we positioned quite a bit of money towards the yen.
Okay, well, that's interesting. The yen is your safe haven. I'm going to get into that in just a bit, but let's talk more about Europe, considering we had German Chancellor Angela Merkel coming out, basically trying to allay fears, and says default not on the cards for Greece just yet, and Germany will do all it can. How do you think this European saga is going to end?
Well, there is no ending. There's a process. And indeed, long-term, we continue to have a fairly positive on the euro, precisely because they're not spending so much money and printing so much money. And the net result is there's a lot of pain. These peripheral bonds are trading like municipal bonds. But the euro can be quite strong. Look at the yen in comparison. Lousy economic growth, yet a strong currency. It's only in the U.S. and Australia, New Zealand, where you have current account deficits, where you need economic growth to have the support for the currency. It's ultimately the bond market that's in charge. The policymakers are reacting. The policymakers can influence the timing and the speed of reform. But even if you kick out the government, be that in Spain or even in Germany, the new government is just going to own the same problem and things are going to move on. And also note, we don't believe in a collapse. We don't have investment banks anymore. Any bank, even when technically insolvent, can go to the European Central Bank for liquidity. So even if Greece, or when, better said, Greece is going to default, the banking system might have a big hole in it, but it is not going to be a Lehman type of moment. And so, yes, there is going to be some issues in the short and medium term, but ultimately less money is being printed in the Eurozone, so we're just waiting for a re-entry point into the euro down the road.
Do you think there is a risk of seeing, I guess, credit windows being closed? We had that story of BNP that they might possibly have U.S. dollaring shut to them. Doesn't this seem like a repeat of 2008? And El Arian saying this could be a full-blown banking crisis again.
Well, a crisis, yes, but we know how central banks react to crises. In the 90s, a zombie banking system was kept afloat in Japan. In 2008, we had Lehman types of companies, investment banks that didn't have access to liquidity facilities. In Europe, what happened, the funding cost has gone up partially because U.S. money market funds have been supporting U.S. banks by buying their commercial paper issued in U.S. dollars. That is abating because of pressures, including pressure from us. And so now they need to find for other sources for funding, and the European Central Bank is, of course, there, providing plenty, indeed unlimited liquidity. And so that will, of course, be the case in case of a default of Greece. And so what's important is the banking system needs to prepare for it. And the good news is that even banks like Societe Generale are finally raising cash. It's high time they do that, only because of encouragement of the market. It's too bad that it has to come to that. But the banks will raise the capital, and they will be kept afloat by the European Central Bank, in our view.
Okay, give me some levels here for the euro. Some are still predicting sticking to their call parity for the euro because of the crisis that they're seeing with the sovereign debt issues. What do you think the euro's headed?
No, we don't think that it's going to be that severe. It's very difficult to say where it's going to go. As we've seen in the Swiss franc recently or the euro last year, sometimes when traders pile into something and it appears to be a risk-free trade, then this can go on for a very long time. We do expect a further pullback, but we're mostly waiting for a bit of clarity in the coming weeks. What's going to happen with the ECB transition? And also, is Greece going to be dragged on until next spring, or is a default going to come earlier? And note, Merkel also said they don't want a disorderly bankruptcy of Greece. And so implying, so to speak, that an orderly insolvency might even be acceptable. Of course, that's going to keep the nervousness up. So we need a bit more clarity. Ultimate clarity won't come, but this is a process that's going to move, and we'll watch the markets very carefully and have some chips off the table by moving towards the yen.
All right, Axel, thank you for that. Axel Merk of Merk Investments, President and Chief Investment Officer.